Good morning and welcome back to Almus Market Mornings. Last week's theme was dollar weakness. The dollar index weakened by 3.4%. The euro had a massive rally of 4.4%. US equities had a tough time, losing 2 to 3%. All of this in the backdrop of tariff game being played out. JK, what would be the key drivers this week?
Morning, Swaraj. First of all, congratulations to the Indian cricket team for winning another World Cup trophy. Yes, last week, of course, as you said, we saw a lot of weakness in the dollar index, and also, in fact, main driver being the euro rally after the European governments decided to spend a lot on their defense and infra. No, what was looked forward to as we were heading into the weekend was the unemployment report from US. And we saw that the report was not as bad as one would have thought, because it is not yet reflecting the worrisome picture that was expected from various government job cuts, layoffs, and expenditure cuts as well. Job creations was a healthy 150,000 plus. And also, of course, the unemployment rate inched up by 0.1%. Wage inflation was also steady. But it appears that it will take some time before the impact of the various new government's decisions would be reflected in the job creations as well. Also, deep dive into the data. The quality of jobs being created is really something to be concerned about, because most of the jobs created have been in a you know in the area of leisure and hospitality, and also healthcare. So these are tending to be the ones which are lower paid, less secure, and more part-time in nature. And also the average working week in US remained at a low 34.1, and this is down from 35 hours in 2021. There was also weakness in the household survey, as employment actually plunged 5,88,000. So the report is definitely not a very strong number, but the headline is somewhat steady, yet to reflect the changes that is happening in the administration. On the other side, in Europe, we also got the GDP number from Eurozone, which actually came better at 0.1% for fourth quarter, and raising its previous estimate, which had shown a stagnation actually. And compared with the earlier year, year-on-year basis, it grew at 0.9%. The outlook for the region has improved due to the recent developments, where the German and the other governments are expected to spend a lot more on their infrastructure and defense, and is expected to give a spur to the economic activity as well. Over the weekend, we also before that, it's also to be noted that Europe has gained a lot in terms of fall in the gas prices, from 43 to 38. That is the TTF gas, sorry, which they use up, and also market expect the Russian supplies to the Europe to resume once the peace accord on the Ukraine war is signed. So there are a lot to look forward to in terms of positives from the Europe, and perhaps some challenging outlook for the US economy. And this aspect is likely shifting the investor focus away from the US exceptionalism to the emerging better picture in Europe. Also, on the tariff, there is a lot of uncertainty. While the Trump administration has postponed the tariff imposition to April 2nd, both for Canada and Mexico. They also talked about more tariffs on Canada for some of the other products like lumber, and they also talked about India, having to reciprocate in a big way to counter the big tariff that they are imposing according to the US administration. So the tariff talks are not going away. This uncertainty will continue to remain. But as we head into the new week, what we're looking at is the inflation number. Now, we also already had the inflation number from China over the weekend, and that showed deflationary trend resuming there. the CPI number was minus 0.7%. And it appears that the domestic consumption is not really as strong as it was made out by the last month's data, which was also led by the holiday period consumption. However, China is still on a steady progress on reforms to improve the domestic economy, and so there's something that we look forward to. As far as other countries, India will have the CPI number out on Wednesday. Again, it is expected to soften to 4% from 4.3%. In US also, the CPI number will be announced on the same day, and both the headline and core inflation numbers are expected to come down. So what we are looking forward to is whether the US economy is weakening more. We will get more evidence of it from hard numbers ahead. We look forward to the CPI number. We look forward to the retail sales number, which is more indicative of how the consumption is going on. We will also have the jobs data tomorrow, which indicates the job creation. So there is a bit of expectation that US economy will slow down, but we'll see evidence from the numbers. As far as the Europe, we are looking at with optimism whether the economy shows improvement. So this is how we are starting the week. As far as India is concerned, last week was kind of a rangy market for the USD INR. Dips were very eagerly bought, but again, we are heading into the financial year end where we normally see some bunched up flows from corporates. At the same time, global cues are not really very supportive of strength in the INR. FIs have continued to sell at least till Friday. It has been on the negative, continuing into the sixth month of a negative flow. We'll see how it pans out in the coming days. Although many analysts are saying that the stocks have reached a level where the FIA should evince more positive interest. However, it is not reflected in their numbers so far. So as far as India is concerned, we look at the CPI number ahead, and also how the trade negotiations between Indian government and the US government take place in the light of the statements by Trump about India imposing huge duties on the American goods. So I think there's a lot more factors for India to consider before we see a trend emerging, and it is not likely that India is going to follow the global currency trend straight away. We will see, we'll have our own factors to consider before that happens. Thank you.
Thank you, JK. And of course, the broad theme was the dollar weakness, yeah, and the euro's massive rally. We had some good data from the eurozone. GDP number for the calendar Q4 was better at 0.1% against the nil growth which the region had been experiencing. On the other hand, we have got the Chinese, which are undergoing a strong deflationary trend. The CPI was at minus 0.7%. The Chinese are undertaking reforms to boost consumption. When it comes to upcoming data, we have got the CPI numbers both from India and US on Wednesday. The tariff uncertainty remains. Some talks on India as well this weekend, which according to US admin has imposed very high tariffs, and that needs to be negotiated. And for rupee, that the trade negotiation and of course the FI selling, which has persisted now in the sixth month of negative flow, will be closely looked at for the upcoming directional move. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.